Welcome back to Investing Talk podcast. Today, we're tackling a question quite a few of you have actually asked about. Is Blacksky Technology a good time to buy right now? We've pulled together some pretty comprehensive insights for you. We'll be exploring everything from its financial health, market position, all the way to its future prospects. Our goal today is really to cut through the noise, give you a clear, balanced perspective on Blacksky Technology, and this is all based on the latest available data we could get as of July 2025. Now, before we really jump into the details, if you're finding these discussions helpful, please do remember to subscribe, maybe like the video, leave us a comment. Your engagement really helps us bring more valuable insights like this to you. And hey, if there's a specific company you'd like us to look into for a future analysis, just drop it in the comments below. Also, maybe consider buying us a coffee. It genuinely helps support the show and keep things running. Okay, let's get into it. Let's unpack this assessment of Blacksky Technology. So when we start looking at any company, the first place our sources always point us is the fundamentals. How healthy is Blacksky Technology financially? What's the core story there?
Yeah, and what's kind of fascinating here is the balance or maybe the tension Blacksky Technology strikes. On one hand, you do see some modest revenue growth. Their revenue grew by about 8.04% in 2024. So it reached $102.09 million, which is up from $94.49 million the year before in 2023. That shows, some stable top-line expansion.
Okay, stable top line, but you said tension. So it's not all sunshine and rapid explosive growth then.
Precisely. Yeah, that's the other side of the coin. Despite that revenue growth, the company is, currently unprofitable. They reported a net loss of $54.22 million. That's on a trailing 12-month basis. And their EPS is negative $2.20.
That's 220. Okay.
Right. And those losses actually nudged up slightly by about 6.24% year over year. So, yeah, no positive earnings or profit margins to speak of just yet.
Right. And that always brings up the question of debt, doesn't it? How are they financing things if they're not profitable? What does the debt picture look like?
That's a really key point. Their debt-to-equity ratio is, relatively high. It's sitting at 1.26. And that indicates some notable leverage, which, as you know, can be a pretty significant financial risk, especially for a company not yet turning a profit.
A high wire act, so
You could say that. And while the specific cash flow trends weren't detailed in our sources, sustained losses plus high debt, it strongly suggests cash flow could be under pressure. They might be burning cash.
Okay, so modest growth, still unprofitable, notable debt. What does all this mean for where they actually stand in the market? What's their niche?
Well, Blacksky Technology operates in a really interesting space: geospatial intelligence and satellite data analytics. It's definitely a niche, but one with genuinely growing demand. Think governments, big commercial clients needing real-time Earth insights.
Okay.
Their Spectra software platform and their satellite constellation, that's their edge. Gives them a competitive technology advantage. They can deliver faster, apparently, and analysts do seem to expect continued growth. The consensus for next quarter sales is about $27.4 million.
Even if profitability is still somewhere down the road.
Exactly. Even if profitability is still a ways off, the market sees the potential there.
Okay, that makes sense. So moving on from the fundamentals, let's talk about how the market is actually valuing Blacksky Technology right now. What do the valuation metrics tell us?
Well, like we just discussed, they're unprofitable. So right away, that tells you a lot about valuation. There's no provisional PE ratio, price to earnings, can't calculate it. And a forward PE, looking ahead, is also unavailable.
Right, no E in PE yet.
Exactly. So it means investors are valuing Blacksky Technology almost entirely based on its growth potential, not its current earnings power. It's a bet on the future.
But analysts do have price targets, you mentioned, so they must be looking at something. How are they arriving at a value?
Yeah, they absolutely do. And you're right, they look at other things. Often for companies like this, it's metrics like price to sales or maybe enterprise value to revenue. They're basically asking how much is the market willing to pay for each dollar of sales this company brings in, even if it's not profitable yet. Or they might be using discounted cash flow models, projecting way out into the future when they might be profitable.
Gotcha. So what are those price targets saying? What's the kind of upside analysts are seeing according to our sources?
Okay, the analysts project a 12-month average price target somewhere between $22.75 and $24.17. Now, the current price is hovering around $20, so doing the math, that represents a potential upside of roughly 19 to 20%.
19 to 20% upside potential. Okay. But that raises the question, doesn't it? How much of that future growth is already sort of baked into that $20 price tag? And what are the risks tied to that kind of forward-looking bet?
That's the million-dollar question, isn't it? You're paying a premium now for that hope of future success.
Okay, so beyond the company's books and the market's valuation, we also need to look at the stock itself. How has it been behaving? What's the technical analysis telling us about Blacksky Technology?
Well, looking at the recent price action, like we said, it's around $20 currently, but the 52-week range really tells a story. It's gone from $3.86 on the low end all the way up to $28.85.
Wow, that's quite a range. Significant volatility, clearly, and quite a recovery from those lows.
A huge recovery, yeah. This stock has definitely been on a ride.
And what about the moving averages? Are they kind of supporting this recent upward move?
They are actually. The 50-day simple moving average, the SMA, is currently $15.82, and the longer-term 200-day SMA is at $11.48.
Okay.
Both of those are significantly below the current price of around $20. Generally, that indicates a pretty solid recent uptrend. The stock's showing momentum.
All right, uptrend confirmed by the moving averages. What about the relative strength index, the RSI? What's that signaling about the stock's momentum right now? Overbought, oversold?
The RSI is currently sitting around 37.64.
3764. So pretty low, but not extremely so.
Exactly. It's definitely
Okay.
closer to the oversold side of things. Remember, below 30 is typically considered oversold, but it's not quite there. So it suggests there's been some recent selling pressure. Maybe the rally has cooled off a bit. It's not screaming buy based on being deeply oversold, but it's not flashing overbought warnings either.
Okay, so a recent uptrend, but maybe some recent cooling off suggested by the RSI. What about the stock's sensitivity to the overall market? And what's the general feeling, the sentiment around Blacksky Technology?
Right, volatility is key here. Blacksky Technology shows medium to high volatility. Its beta is 2.07.
Whoa, over two.
Yeah. So a beta over 1 means it tends to move more than the overall market. A beta of 2.07 means historically if the market moves 1%, this stock tends to move about 2.07% in the same direction.
So it really amplifies market swings. Higher risk, potentially higher reward.
Precisely. It magnifies things. Now, as for sentiment, the broader market fear and greed index is kind of neutral to mild fear, sitting at 39. Our sources didn't really mention strong social media buzz one way or the other. But, and this is interesting, the analyst sentiment is actually quite bullish. We're seeing a consensus strong buy rating from somewhere between 6 and 9 analysts covering the stock.
Huh. That is an interesting mix. Bullish analysts, strong technical uptrend on moving averages, but high volatility, a beta over 2, and an RSI suggesting maybe some caution recently. What really stands out to you from that combination?
I think what stands out is the potential disconnect, or maybe just different perspectives. The high beta, the volatility, that RSI,
Yeah.
that screams caution for short-term traders. This thing can move fast and against you.
Right.
But the strong analyst buy ratings and the fact it's holding above those moving averages, that seems to speak to longer-term investors who are looking past the daily noise and focusing on that growth story we talked about earlier.
So really depends on your time horizon.
Exactly. It's a classic growth stock situation where the professional analyst view might differ quite a bit from, say, short-term market jitters.
Makes sense. And of course, no investment analysis is complete without looking ahead. What are the potential catalysts that could move the stock price? And, just as importantly, what are the risks investors need to keep front of mind?
Okay, catalysts. A big one, short-term, is their upcoming earnings report. It's scheduled for August 7th, 2025. That could definitely cause significant price movement, depending on whether they meet expectations, beat them, or miss, especially progress towards profitability or lack thereof.
Any surprises there could be big.
For sure. And longer term, continued development is key. Expanding their satellite constellation, improving that Spectra analytics platform, each step forward could drive value. And then there's the broader trend, the growing demand for geospatial intelligence overall. That's a strong tailwind for the whole industry, including Blacksky.
Okay, sounds promising on the catalyst front, but let's talk risks. Every investment has them. What are the big ones for Blacksky Technology?
Right, risks are definitely present. The most obvious ones are stock-specific, tied to what we discussed earlier, continued losses, that relatively high debt load, and potential cash flow issues. If they can't get to profit or find more funding, that's a major risk.
Fundamental risks.
Yeah. Exactly. Then you have sector risks. Space tech is super capital intensive. Building and launching satellites costs a fortune. It's also highly competitive, technology changes fast, and relying on government contracts can be unpredictable. Cycles change.
Yeah, dependency on government contracts can be tricky.
Definitely. And then broader market risks. Given that high beta, any big market sell-off, especially in tech, could hit Blacksky hard. And finally, even though it trades about 1.2 million shares a day, which sounds liquid.
That volatility means big swings.
Precisely. Our sources noted about 27% volatility. So it's liquid, yes, but prone to really significant rapid price movements, up and down.
All right, we've really dug into the fundamentals, the valuation, the technicals, potential catalysts, and those significant risks. Let's try to tie it all together now. What's the overall rating, and how should someone think about approaching Blacksky Technology as an investment?
Okay, putting it all together, our analysis lands Blacksky Technology with a rating of 6.5 out of 10.
6.5 out of 10. Okay.
Yeah. And that rating really reflects that strong growth potential. We talk about bullish analysts, the projected upside, its position in a growing market. But it's seriously balanced against those high risks. The ongoing losses, the debt, the capital needs, the volatility. It's got vision, but it's also got hurdles, big ones.
So for someone looking at this, thinking about maybe taking a position, what's a reasonable entry point? And who is this stock actually best suited for? What kind of investor profile fits?
Well, looking at the technicals and current price, the analysis suggests an entry point between $18 and $20 seems reasonable. That's pretty close to where it is now. The idea there is to try and capture that potential analyst upside while managing risk somewhere near recent support levels.
Makes sense.
But connecting that to the bigger picture, Blacksky Technology is really probably better suited for long-term investors, specifically investors with a higher tolerance for risk who can stomach ongoing losses and that sector volatility we mentioned.
Patience required.
Definitely. For those investors, there's that potential for over 20% upside over, say, 12 months, targeting that $24 analyst consensus area. They need to believe in the long-term story.
Okay, so primarily a long-term, higher risk tolerance play. What about short-term traders? Is there anything here for them, or is it just too risky?
I'd say short-term traders need to exercise significant caution here. Yes, the upcoming August earnings could provide some volatility, maybe a trading opportunity, but the forecast suggests only a limited short-term rise, maybe 3.8% or so in the next couple of months.
Not a huge immediate jump expected?
Not based on current projections. And given that high volatility and the beta over 2, any quick gains could vanish just as quickly. So if a trader was going to play it maybe around earnings, a really strict stop loss would be crucial. Say 15% below entry, maybe around $17, to limit potential downside.
Absolutely critical with this kind of stock.
For sure. A take-profit target could be near that analyst consensus of $24. But honestly, the short-term game here looks pretty high risk.
Okay, understood. So let's just summarize our discussion on Blacksky Technology. What are the key takeaways? It seems to offer a pretty compelling growth story, right? It's in that hot geospatial intelligence space. It's got strong analyst buy ratings, and there's that projected 20% plus upside over the next year. Lots of potential.
Definitely potential. But you absolutely have to remember the significant financial risks involved. The company isn't profitable yet. It's carrying quite a bit of debt, and it operates in a very tough, capital-hungry, competitive sector.
And technically,
yeah, we see that recent uptrend, but it comes with medium to high volatility and a broader market sentiment that's leaning a bit cautious right now.
So for long-term investors who are okay with those risks and the volatility, buying near that $18, $20 level could make sense, aiming for that $24 target over the next year or so.
That seems to be the profile, yes.
But short-term traders really need to tread carefully. Maybe watch the August earnings, but use very tight stops because this stock can swing wildly.
Absolutely. Caution is the word for short-term approaches here.
Yeah.
And, this whole assessment, it's based on the data we have right now, July 2025, which kind of brings up a bigger question, doesn't it?
Oh, what's that?
Well, just how do we, as investors, balance this? The really exciting, disruptive promise of these high-growth, maybe capital-guzzling technology companies like Blacksky. How do we balance that against the more, traditional, maybe more sober indicators of financial health, like profitability, debt levels, stability?
Yeah, that's the fundamental tension, isn't it? Promise versus present reality, potential versus peril.
Exactly. It's a dynamic that's right at the heart of investing in many of these cutting-edge opportunities today. Requires a really nuanced view.
That's definitely some food for thought. Well, thank you for joining us for this detailed look at Blacksky Technology today. We genuinely hope this conversation has given you a clearer, more informed perspective to consider. Until next time on Investing Talk Podcast.